Top three things in my notebook this morning. Number one, China. Number two, Russia. And number three, the 10-year bond yield. So first on China, I think if you didn't know, I guess now most people know, China's not exactly hitting the cover off the ball. Down 18.1% year-over-year exports. I think there was an expectation out there of like up something. Well, that was down a lot. So Chinese stock market down a full 3% last night to down 5.5% year to date. Hong Kong was down another 1.8%. It's down 4.4% for the year to date. And mostly everything in Asia actually didn't act well, with the exception of India, which we like. India is actually in stark contrast to China, up 4% for the year to date. So again, watch out for these countries that are devaluing their currency. China's currency actually falling down again this morning. Russia, I think the market's closed there, the stock market. But again, just a friendly reminder that it's not over. Again, it's not over. Russia and the Ukraine, interestingly, watching their stock markets for the year to date. The Ukraine's up 29, actually up 30% for the year to date. So evidently burning your currency can get the stock market up, but that worked for 1920s Germany as well. In the face of that, Russia's stock market's just terrible. So again, look at it for what it is. You got the stock market down at this point almost 20% for the year to date, with its currency, the Russian ruble, down a full 10%. Now finally, 10-year bond yields really tested our trend line last Friday. 281 is that trend line. It went right above it and failed at the line. So again, that's a stiff reminder that growth slowing still is our call. And again, to close above that line, we would say, okay, maybe growth is better. But for now, the market, from a real-time market signaling perspective, says that it is not. And those are your top three things.